All right, today we are tackling a real titan of tech, one that's become a massive puzzle for investors everywhere, and that's Alibaba. This was once hailed as this unstoppable global powerhouse, but now it's a name that brings up both huge opportunity and a whole lot of fear. So let's break down exactly what's going on.
For years, you heard the easy comparison, right? Oh, it's the Amazon of China. But honestly, that label, it doesn't even begin to scratch the surface of what Alibaba is today. We're talking about a company at this incredible crossroads. I mean, you've got deep value on one side, major risk on the other, and this game-changing tech potential right in the middle. So what is really going on with this giant?
And really, at the heart of this whole story is a huge, massive strategic pivot. The old Alibaba, the one everyone got excited about, was all about hypergrowth. I mean, expand at any cost, just get bigger. The new Alibaba, whoa, it's a totally different story. It's been forced to adopt a completely different mantra. We're talking efficiency, smart use of AI, and this new, laser focus on giving value back to shareholders.
And all this sets up what I like to call the Alibaba paradox. From market darling to a deep value dilemma. I mean, think about it. How does a company that was the absolute darling of the market turn into this deep value puzzle for investors all over the world?
Okay, so to really get that paradox, we've got to pop the hood and see what this thing is actually made of. Because spoiler alert, Alibaba isn't just one company, it's this huge, sprawling ecosystem of a bunch of different interconnected businesses.
So the first thing you absolutely have to understand is this. Alibaba isn't a single company. It's really a portfolio. And everything revolves around its China commerce business. You really have to think of that part as the cash engine. It's the big, powerful motor that's just pumping out money to fund everything else. All of their other big bets, from going international to their really ambitious cloud and AI projects.
And this breakdown here really lays it all out. So you've got the core China commerce, which is the mature, profitable cash engine we just talked about. Then you've got the international business. Yeah, it's growing like a weed, but it's still deep in investment mode, which means it's losing money for now. And then you have the cloud group. And this is the one that so many people believe is the real key to Alibaba's entire long-term future.
Okay, so let's really zoom in on this because this is crucial. The Cloud Intelligence Group, this is positioned to be the company's #1 most powerful growth engine for the long haul. I mean, think about it. As AI just explodes everywhere, the demand for the kind of heavy-duty infrastructure that Alibaba Cloud provides, well, it's just set to go through the roof. And this quote, it just perfectly nails their whole AI strategy. They aren't trying to build the next flashy, shiny consumer app that you'd use. No. Their goal is to be the foundational provider. They want to be the ones selling the essential picks and shovels to the thousands of other companies who are out there trying to strike gold by building their own AI tools. It's a really smart play. Okay, so if the company has all these incredibly powerful assets, you'd think it would be flying high, right? But that is not what happened. Not even close. The stock price just collapsed, and I mean dramatically. So let's get into the big question, why? And ma'am, when the fall happened, it happened with shocking speed. It all kicked off in 2020. We had this series of regulatory crackdowns, then the sudden, shocking cancellation of the massive Ant Group IPO, which was supposed to be the biggest ever, and then a complete leadership reset. Put it all together, and it just completely shattered investor confidence. It was truly a perfect storm of concerns. You had the intense regulatory pressure, for sure, but then on top of that, you had this real fear that its shares listed on U.S. exchanges could actually be delisted. And then you add a slowing Chinese economy and just general capital flight from Chinese stocks. It was a cascade. But, and this is a really important point, you have to remember that a lot of these were cyclical or maybe even one-time issues, not some fundamental breakdown of the business itself. So, facing this massive crisis, Alibaba basically had to throw out its old playbook and write a brand new one. And we're not just talking about a few new tactics here. This was a fundamental, philosophical shift for the entire company, from growth to value.
So gone are the days of that growth at all costs mindset. That's out. What's in its place is this new, much more mature philosophy, and it's all about discipline. So what does that mean? Well, it means cutting spending that isn't working, focusing only on projects that actually generate a high return, and, maybe most importantly, actively giving cash back to shareholders.
And that brings us to a really key piece of this new playbook, share buybacks. Now, this might sound like a bunch of financial jargon, but it's actually pretty simple and super important. When a company buys back its own stock, it's basically reducing the size of the pie, so your slice of the pie automatically gets bigger, making each share more valuable. It's also a huge signal from the management team, basically telling the world, hey, we think our own stock is a bargain right now.
All right, so they have this new playbook. The big question is, what happens now? Where does it go from here? Let's walk through 3 possible futures for Alibaba: the bull, the base, and the bear case.
First up, the bull case. This is the super optimistic view. The idea here is that as investors slowly start to trust the company again, and as those AI and cloud businesses really start to fire on all cylinders, the stock gets what's called a major re-rating. In simple terms, that just means people are willing to pay way more for the stock than they are today, which could cause its value to shoot up. Then you've got the base case, sort of the middle-of-the-road scenario. This path sees a much more gradual, maybe uneven, recovery. The core business chugs along, the cloud business comes back but slowly, and those share buybacks keep creating steady gains. Nothing explosive, but solid. The company basically starts to trade like a mature value tech hybrid. And finally, the bear case. This is the pessimistic view. The fear here is that even with all its great assets, the bigger picture, a weak economy, ongoing geopolitical tensions, just keeps a lid on the stock. In this scenario, even if the company does everything right, these outside forces might be too strong to overcome and the stock just stays stuck. So when you boil it all down, this is what it comes to. This single question really sums up the entire Alibaba story right now. The question isn't, can Alibaba grow? We know it can. It has the engines to do it. The real question, the billion-dollar question, is will investors ever fully trust it again? So how do they win back that trust? Well, it's not going to be with flashy press releases or big, bold promises. Nope, it's going to be earned the old-fashioned, hard way, by just doing the work, consistently pumping out cash flow, giving capital back to shareholders, actually delivering on that AI and cloud strategy, and just hoping for a more stable regulatory world. For anyone looking at this company, the question has shifted. It's not about potential anymore. It's all about execution. And that, well, that's a story that is still very much being written.